Welcome to Module 3, Section 5, where I will discuss a thing called penny stocks.
Some people just love penny stocks. Other people hate them. And then you've got the in-betweeners who kind of like them. Maybe you made a little money in penny stocks, or maybe you got heavily into penny stocks and lost some money, but you're kind of still on the fence whether they're good or bad. I'm just going to offer you my perspective when it comes to penny stocks. Doesn't mean I'm right, but I do have a lot of years of experience and I've really studied this and I've had a lot of exposure to this over the years. So just hear me out. But some of you are going to disagree with some conclusions that I make. A penny stock is a stock that trades under $1 per share. So think of it as the dollar store. Why they don't call them dollar stocks, I don't know. But for some reason, anything under $1 is considered a penny stock. Mainly because under $1, you're just dealing with cents at that point. Either lack of cents or dollars and cents. You can look at it either way. Many investors find it really enticing to buy a stock at such a low price. Well, yeah, I can get into this for 14 cents. And all it has to do is go to 28 cents and I've doubled my money. Yeah, that can seem pretty enticing. And I get all of these unsolicited, mind you, emails every day. I get hundreds of emails touting the next latest and greatest penny stock. You should buy it now at 4 cents. It's guaranteed to go up to $100. If it was that good, and if they really wanted to believe in it that much, would they be sending you information? Would you even know about it? I don't think so. Rule number 1, which is not on the slide here, is don't pay attention to all that garbage that you get in your email. It's all fluff. It's pump and dump. They're just trying to pump up the price of a stock, getting people to get in, and then once they pump it up high enough, the people who are behind this scheme are going to sell and get out. Prices are going to crash, and you're going to be left holding the bag. Throw that off to your recycle bin and don't even recycle it. Just flush it down the toilet. So one positive factor is that many shares can be purchased at very low prices. Yeah, I can get 100 shares for 4 cents each, man. Doesn't cost me all that much. And what a lot of people do is they rationalize this by saying, oh, I'm just having fun. And that's great if that's what you start out doing. If you're just throwing some money into the market just to learn about how things work, or you just want the thrill of buying and selling a little bit and then watching prices over a period of time, that's fine. But a lot of people, they seriously intend on making buku bank on this stuff. And then when they don't, they're very, very disillusioned with the whole process. When that doesn't need to happen. Usually a profit is seen when a penny stock only increases in value by a few cents. Hey, what's the big deal? I buy it at 14, sell it at 28. That's only 14 cents. That's not that much. Do you realize that's a 100% move? That is much. So just because there are small prices, a 1 or 2 cent move is a huge percentage move. And one of the things you'll learn about me is I'm mostly concerned with percentages, not point moves. Watch some of my other videos and you'll find that out. It's pretty enticing. Hey, get in at 6 cents, sell it at 10 cents. Woohoo! 40% return. The reality of penny stocks. Making a profit on a penny stock is actually quite deceiving, and I've seen this played out. I've had a lot of students over the years who've fallen into this trap that I'm going to reveal to you. For example, it does not seem that far-fetched to buy a stock at 10 cents per share and then sell it for 20 cents per share. Yes, there's one person that I know who's not a student, but they're like, yeah, this is my retirement. They pay out a dividend every year. The stock's at 14 cents. What kind of a dividend are they going to be able to pay out to you? And they've been at 14 cents for a long time. The first question you need to ask is, why is this stock 10 cents per share? Why is that other stock 14 cents per share? The stock market is really good about attaching actual value to stock prices, even stocks that you haven't heard about all that much. There are people out there looking all over the place trying to find these gems, these diamonds in the rough. And if they haven't found them, or if they've passed them by, what makes you think that you're going to uncover something? Now, that doesn't mean you won't. It doesn't mean that you'll never succeed at this. Maybe you find some stocks that are an area of interest of yours or expertise that you have, and you do uncover something and you really believe in that stock. That's a different story. If you're buying something that you believe in, that's great. But if you're just looking for something to buy at 10 and sell at 20, look other places. You'll have more fun doing other things. Go over to the cryptocurrency market where people are losing their shirts thinking that they're going to get rich. So if the stock manager considered this to be a valuable stock, the price per share would be much higher. The entire stock market works on supply and demand. If something is really in demand, the price is going to go up. If something is not in demand, it's going to go down or stay about the same. If nobody else is really buying this stock, do you think you should? Now, there are exceptions, and you can come up with 100 of them. And some of you that are going to comment on this video are going to say, yeah, well, I bought ABC company for 8 cents and it went up to $4 and I sold it. And man, my family's all happy and I'm out of debt. Great, wonderful. I hope that happens for you every time. I'm treating this at a high level. I know that there will always be exceptions. I'm just trying to talk to those people who might be looking at penny stocks and they ran across this video and they went, yeah, he's giving me some things to think about that I didn't think about before. And that's what I'm trying to do here. I'm just giving you my perspective. So for every 1,000 stocks that can be bought under $1 per share, perhaps one will climb in value. Yes. For every one Microsoft, there are 10,000 non-Microsofts, or a company that started off by being the next Microsoft, but it didn't work out that way. One of my personal philosophies is I like things that are more established, that have stood the test of time. A lot of these penny stocks are brand new. Companies you've never heard of. You don't even know if they're based in the US. You don't even know what their accounting is really like. There are a lot of scams out there. And if you're getting these unsolicited emails, chances are there's a scam behind it. When you play with penny stocks, it's kind of like playing the lottery. Yeah, people win the lottery. What are the chances that you're going to win? Pretty much nil. But there are still people that do. The same thing with penny stocks. There are good penny stocks out there that are the next Microsoft or the next Apple or the next Google. But there's 10,000 other stocks that people think they might be that aren't. So more importantly, these stocks are often so thinly traded. This was the selling point to me. The bid-ask spread is typically very large. And these are some of the experiences that I've had with other people that I'll tell you about. Just to give you an idea, this doesn't apply to anybody in particular. This is more of a generic story that I've heard probably half a dozen times from different students. They get into a penny stock, and let's say you get in at 10 cents. And you're watching the stock and you're all excited. You think it's really going to move. You see that thing go to 15 cents per share. That's a 50% move. And so you're getting all excited. You're ready to get in there and sell. And all of a sudden, the price falls back down to 10 cents per share. What happened? It went up and then it went right back down. Well, what you may not understand is there is a bid price. That's the sell price. And there is the ask price, that's the buy price. And some of these stocks are so thinly traded that it might be at the point where to buy that stock is 15 cents, to sell that stock is 10 cents. And really the only thing that happened during that time was a buy was transacted. And then the next people looking to get into a transaction are looking to sell, so it goes right back down to the bid. Really nothing happened at that point. A trade was transacted, but it didn't affect your position at all. You're getting all excited because you just think you saw a 50% move when that's not really what happened. So don't get stuck in that kind of a trap either. One of the reasons that I look at the S&P 500 is the bid-ask prices are about as close together as you can get. They're usually 1 cent apart. Not only for the ETFs that we trade, but also the options that we trade as well. And that's what we want. Where with penny stocks, it could be a mile wide. The buy price and the sell price. And if you don't understand that, look at some of the videos that I have that talk about the bid-ask prices and the bid-ask spread. I go into a lot of detail. Not only is it difficult to sell at a favorable price, finding a buyer on the other end of the transaction can take time and may not even be possible. This is like selling a piece of art that's worth $20 million that I talk about in my liquidity video. If you can't find a buyer, how much value is that asset really? And I'm not counting sentimental value or historical value. But you might put in an order to sell some penny stock that you own, and it may not get executed ever. It might take days, weeks, months, and by that time, what has changed? You may not even like the stock anymore, or you might be at the point where you need to get out, and now you're willing to get out at any price. So then another mistake that people do is they double down. They think, okay, I bought 100 shares at 10 cents and it's fallen to 5 cents. Well, I'll buy 100 more. Now my average price is 7.5 cents. That's another mistake that people make, throwing good money after bad. I take a whole different approach in the program that I teach. And that's why I've reached a lot of the conclusions that I'm sharing with you now in this video. So we want to look at high quality stocks. So the SPX investing program doesn't teach about penny stocks. If you like the videos that I'm putting up and you want to become part of my program, we won't even talk about penny stocks. And if you have penny stocks, I probably won't even take the time to discuss them with you. I want to look at high quality stocks. I don't even give them really any regard. That's where I come out personally. Now, I've invested in penny stocks over the years and I've made some money on them. There are exceptions. I'm talking about a high-level view of a program that I teach. Investing in penny stocks should be considered gambling. That's what you're doing here. You don't know much about this company. They don't have a track record. They don't have a long accounting period. And if they were a $100 stock and now they're at 10 cents, what in the world happened and why would you even want to invest in them? Well, they're going to go back up. Things are going to get better. Okay, I hope they do. But what are the chances really? There's people that spend all their days looking for these kind of scenarios. And if they passed on it, don't you think you might want to pass on it too? So the S&P 500 is comprised of much higher quality stocks. We have Apple, we have Amazon, we have Google in the S&P 500, Intel, Microsoft, a lot of these household name companies. There's a lot of companies that you've never heard of, but the S&P 500 has a set of criteria. And watch my video where I say the best stock tip that you'll ever hear. That's where I talk about the quality that's built into the S&P 500 that other indexes don't have, that other investments don't have. So we want to look at something that is made up of good quality. Stocks of high value and quality are usually referred to as blue chip stocks. If any of you play poker, it's usually the blue chips that have the most value, whatever you attach to them. Somebody came up with this concept about 100 years ago, and it's just stuck. So if you're ever watching any of the financial media and they say, oh, the blue chips were up today, that means the high quality stocks. Blue chips in and of themselves refer to poker, but blue chips in a stock market sense refers to quality.
This concludes Module 3, Section 5, and I will pick things up again in Section 6.